Good morning. It's Thursday, January 9th, about 6 a.m. Central Time. Just a quick note here. It's a national day of mourning for former President Carter. Today's CME indices and CBOE VIX will close at 8:30 a.m. Central Time. The CBOT interest rates, grains, and CME livestock will close at 12:15 Central Time. All other products will observe normal trading hours. So that's just a quick announcement. Popped up on my trade platform. Many of you guys trade futures products, and that's important information to know here. So looking at the overnight, the precious metals market, they are higher after yesterday's explosive session led by platinum, copper, and silver. Your 1, 2, 3 best performing commodities year to date. So up 8, 7, and 6%. So there's your check on performance leaders. Now for months, we've been giving you kind of the setup on the platinum market. Now yesterday on the close, we started another seasonal setup on the gold market where we've seen gold prices rally 13 out of the last 15 years into February 1st. Now, I do have to throw out a disclaimer that remember that past performance is not indicative of future results. So some overnight headlines that I'm watching here. You do have a tentative port strike, an agreement with the port strike. Why is that important to us as commodity traders? Because of the fact when you have supply chain disruptions, oftentimes it leads to higher inflation. You get that port strike agreement in place, you get things moving seamlessly throughout the country, you might get just a small tick down. Nothing very significant, but it is a bullet that was dodged and another unknown variable that we didn't want to encounter here, especially as long precious metals bulls here, because of the fact it could hold interest rates higher for longer, inflation higher for longer, and the dollar higher for longer, weighing in on some key commodities that many of us trade here. So another thing to note here is that the British pound fell to its lowest level in a year. So what does that mean for you? If you're sitting at a pub in the UK and you're talking about gold here with your mate that's sitting next to you, you're high-fiving, you're having another pint here, and you're saying that it hit another all-time high. That's why many of you that are working with me closely are short some of the euro currency against the long gold market, just in a partial play here because of the fact, remember, gold trades as a global asset and against other currencies here, and gold technically is a currency as central banks hold it in their vaults. So if you look at gold against the Australian dollar, the British pound, the Canadian dollar, the euro currency, the Japanese yen, the Swiss franc, the Mexican peso, chances are it's hitting all-time highs against all those different currencies. Now in the US dollar, because of the fact that the dollar keeps edging up and it's near 109 and it's gained over 5% in the last 6 months, that's why gold futures haven't pushed up here to new all-time highs. So a lot of times when you get all these outside currencies going up there, it broadens out the rally from one currency to another, and it becomes a self-fulfilling prophecy that many of these commodities do hit. Specifically, the gold market does hit an all-time high against all key currencies out there, but we're going to have to wait and see how things played out here. So, okay, back to the markets, and let's look at the overnight price action and your setup for the day. So, of course, gold, $26.88, up $15.50, high $26.90, the low $26.73. So, continuing to kind of ratchet up here with some higher lows and some higher highs on the charts. Silver market, 3102, high 3106, right at our pocket resistance point. We'll see how it plays out here. Low of the session, 3065, up about 1%. I did see a story on the Bloomberg terminal talking about China's solar self-discipline sparks a rise in key material prices. So remember, if solar starts to take off again, that's really going to help out that silver market, because that market was flooded, it was saturated, and if they could get that thing curbed and then they could structurally rise and broaden the expansion of solar, that should act as a small tailwind in the silver market. Now shifting to copper, if you didn't see the interview I did on copper on CNBC about 2 days ago, I really laid out some things like how AI applications and energy intense computing is going to add about 3.4 million tons of copper demand each and every year, and that copper demand or copper supply is extremely difficult to just suddenly bring on. So the fact that copper market could really be strained. So we watch a lot of things like LME copper inventories and things like the such that could drive and act as a leader in us anticipating these higher copper prices. We talked about a seasonal play that happened in copper as well here earlier in December. Now shifting to platinum, $9.85 up $1.30, broke out over, there's a downward channel. If you get the metals itch, I draw that on the charts here. We've broken out above it here, and it feels like, and feeling is not a good thing at all here, so we'll skip that term. We'll go back with what the models say, and the models predict that the high on the platinum market could be $1,000 here today. So I also published these ranges on the metals edge as well using a price volume volatility method. It is our tactical range product here. So getting it back into the gold silver ratio, still sitting at 86 to 1. So it's an organized rise between the gold and silver market. Now last week, remember when it was 89, 90 to 1, we were feeling like things were a little bit overstretched here as far as the gold against the silver market. So now turning to your outside markets, oil prices having a one-day breather after consolidating right around $74, $75 on that February contract, coming off a bit. Now it looks like things are starting to ratchet back up and we can make another throttle back near the highs. Natural gas, that's a crazy market right now. High degrees of volatility in that market. Many of you are working some option spreads. Many of you are long futures contracts. On the futures contracts, remember there is a micro natural gas every $1. So if it goes from 3 to 4, 4 to 5, and back to 4, your account's moving $1,000 every $1 move. The options on there are extremely liquid, but I'm telling you that the premium really gets pushed into those and it really gets sucked out of there real fast. So you got to have your finger on the trigger if you're going to trade any of those particular products. Now pushing on again the dollar index, really close to 109 right now. Again, gained over 5% in the last 6 months. You shift to bond yields, 10-year yields are pulling back from their highest level since last April. This comes as the expectations for interest rate cuts in 2025. So that's what we're paying attention to as precious metals traders, falling to just one cut this year. And you've got only a 60% chance that they have that second cut. There is, on the flip side, a growing number that they won't cut at all, and that's a 15% chance that they don't cut. So really now we're juggling in the fence between this 1 to 2, when remember when gold futures were near their all-time highs, that was when we were saying, hey, 3-4 cuts and the Fed's going to be really easy going forward and everything's fine and dandy. Well, then you come into the election, you come into the possibility of tariffs, you start to see inflation rise, you see those expectations rise, the dollar index gains 5%, and then, hey, but you know what? Gold futures are pushing back here and we're back below 2,600. That's what occurred on there. So you got to really pay attention to, it's just not one thing, it's everything when you trade the commodity markets and the macro markets. Now, Bitcoin having about a 3-day sell-off here, but the sell-off yesterday was really a battleground between the 96 and 93,000, and we're having another one of those days here today. So it could be a period of consolidation before what we presume will be another resumption of the bull trend. Now, a lot of people, and they brought this up to me yesterday, was they were talking about, crude oil futures. Everybody was saying Trump was drill baby drill and prices should be at $60 right now. And look, we're banging on the highs. And then everyone was saying that, hey, JD Vance and Trump are these Bitcoin bros and we should be at 120, 150,000. And look, we're struggling at 100,000. So it's just funny how the dynamics change so much. So the important thing about that is just don't grab onto some of these headlines that you see out here and just anchor those in your head and just regurgitate them, because these markets change all the time and the underlying developments change. Because if you see treasury yields continue to rise, maybe some people that caught that move in Bitcoin want to cycle out of Bitcoin and park their money into a 5% yielding savings just for the moment, and then wait and see if the market resumes its trend, and then cycle the money out and catch back into the next level. So remember, when it comes to futures trading, you can call time out at any time. That's why a lot of you use stop losses. You get stopped out, you reassess, just like they call time out. There's halftime in a sports game, and then you come back in and you resume play. So getting into a couple other things here, the CME Fed Watch Tool, again, only a 6.9% chance that the Fed cuts 25 basis points at that that next Fed meeting. Then you get into some of the data that's coming out. So we got the challenger job cuts. Then we've got about four FOMC members are going to speak throughout today. Sorry, I haven't had my coffee yet, and it's about 32 degrees here in Florida, so it's off to a little bit of a rough start. Then tomorrow we've got the non-farm payroll data, the unemployment data, the University of Michigan sentiment, and the inflation expectations. Upside probable range on the gold market, and again, if you get the metal's edge, you get this. It says 2,700, then 2,719. Your first key level of support, 2666. On that silver market, it's going to be 3119 followed by 3163. Key level support, call it a pocket support, 3050 down to 3048. And if you wonder what I do, I'm pretty old school. I print off all my charts at night. I go through, I measure all my levels. I go through everything here. I look at things, basic things like, hey, MACD turned positive on the gold market. Stochastics rising from oversold territory, now going into overbought territory. We're hugging the 50-day moving average. People ask me about moving averages, and moving averages are different whether you use exponential, smooth. If you are going to offset those in the future at some point in time, I use a proprietary method for my moving averages as well. Also, it dictates if you use a continuous or just that specific contract month with no additional data behind it. You're going to get very different results on what your moving average is. And that's why there are different price levels that people achieve and have different targets in these different markets here. So really the key level to watch in the gold market's 2,700. Can we close above that? We'll go to a neutral trend, and then we could start attacking some of the higher levels. On that silver market, it's going to be 31.34. That's my 50-day. And then 31.70 is your trend reversal point. Copper futures closing up. If they can close here, they'll close above the trend reversal point, and they'll start to go bullish trend. So we'll start to look at buying some of the corrections on the copper market for our clients. Remember, there's a small contract on that. That's the 2,500 pound contract. Every penny move is going to be $25. And then platinum futures kind of consolidating here. So your key level of support is going to be the downward slope and 50-day moving average, which is sitting at 966. So a little bit longer video here, but we had a lot to unpack. So remember, futures option trading involves risk of loss. If you want to open up a futures trading account, send an email to info@BlueLineFutures, and my phone number 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.